Welcome, it's Sarah Larby, guest host and producer of Everyday Investor, where we show you how your money can make money, whether it's stocks, options, real estate, and there's lots of different strategies. This is going to be the place for you to get your information, your knowledge, and build your team of solid professionals along the way, whether they are lawyers or coaches or people you just want to connect with. So we've got lots of great guests. Don't go anywhere. Coming up, we are speaking with Brandon and Carol from Modelo Properties on the BRRRR Strategy.
The biggest piece is asking for help and learning from people that have been there before. And so once we saw the success, we're like, okay, how can we do this faster and scale it? And so we went right into looking for a coach, a mentor, somebody that can really guide us through it. We knew we didn't have to reinvent the wheel.
Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, zero commissions. Head over to our website, everydayinvestor.com, to find out more.
You've always dreamed of having rental income, but buying a rental property? Well, that's a tall order. Capitalize on the space in your home instead. Renovate and rent out that space with ease with LegalSecondSuites.com and the team at Wise Construction Group. With LegalSecondSuites.com, our talented team of BCIN designers, engineers, carpenters, and tradespeople can transform that unused space into a beautiful, legal, and safe rental unit. We're empowering the everyday homeowner to become an extraordinary landlord. Get more out of your home. Visit LegalSecondSuites.com for more information.
Hey, it's Kyle from the Kyle Ford Mortgage Team. I want to talk to you guys about what to do in a rising interest rate environment. I'll start with what not to do. Make sure you're getting advice from a person who represents you and your interests. Going to the bank that holds the mortgage is likely not the person that's going to best represent you in this decision. I want to give you an example here. What is a mortgage? A mortgage is a bond that's sold on the open market, which means when you go in to lock in your rate, you're not locking in the rate for your benefit, you're locking in a higher return for the bank's investor. These are the type of things that you want to be thinking about when making these decisions. Make sure you're working with an independent agent or broker that has your interest in mind. Ask about products like static variable, ultimate cap variables, or shorter term mortgages like a 2 or a 3 year. If the rates are keeping you up at night, make sure you're talking to a professional who can help advise on the best needs for you. If you have questions on how this works, don't hesitate to reach out to myself and the Kyle Ford Mortgage Team.
Carol, Brandon, welcome to the show. How are you guys?
We're so good. Thanks for having us.
Thanks for having us, Sarah.
I'm so excited. You guys are, really showing the world what you're doing on Instagram, on social media. You're making some wonderful content, teaching newer investors as well how to buy real estate investing and all of that good stuff. Walk us through a little bit of your story and how you came to where you are today.
Yeah, absolutely. I'll kick it off for us. Like most people, we saw real estate as a great vehicle to build wealth, but really we had no idea what we were doing. So in 2017, our journey kind of started. We bought a condo, but in 2019 is when we really thought about honing in on a strategy. And so we focused on a duplex conversion, and we bought our first duplex in Hamilton in 2019. And we had a lot of success with that one. And then along came our baby boy, Teo. And that kind of really changed our world. I was in tech sales and Carol in public accounting. And it just really showed us what the possibilities are within real estate. And also with the birth of Teo, we were just like, we want our future to look a lot different than we had originally planned when we got married and met 13 years ago. So with that, we, instead of making it a side hustle, we decided to go all in on making real estate a business for us. And that's where we created Modelo Properties.
Very cool. Congratulations on your success. So just to fast forward, I guess, from 2019-ish to today, what is your strategy? What does your portfolio consist of?
Yeah, so I guess we started officially with one duplex, so 2 units, and then over the course of the last 2 years, we've gotten it to over 25 units, primarily focusing on the BRRRR method. We have done some flips along the way as well. And yeah, now we're diversifying into different markets as well. So now our portfolio should be yielding about $500,000 in rental revenue a year.
Amazing. I mean, that's like a big leap in a very, very short amount of time. So somebody that's watching this on TV are probably wondering how does that happen, right? How do you go from like one small duplex to 25 plus units? Walk us through how that all happened.
Yeah, the biggest piece is asking for help and learning from people that have been there before. And so once we saw the success, we're like, okay, how can we do this faster and scale it? And so we went right into looking for a coach, a mentor, somebody that can really guide us through it. We knew we didn't have to reinvent the wheel. People have been there before, so why not learn from some of the best? So from there, we grew our knowledge base. We listened to a lot of podcasts, read some books, and really invested in ourselves. And that's led us to hiring a support staff of 3 folks and really investing in many different markets. And like Carol said, not being afraid to pivot. A lot of people think when you pivot or you change that it's a failure, and failure helps you grow. And so we think fail fast and grow fast, and that's really what the strategy was for us.
Yeah, very early on in the journey, along with hiring a coach, we really made sure we had the right power team, right? So like everybody, we said, well, we have no money, like all of our money is in a house, so like how are we ever going to do this? But when you talk to people that have been there, they tell you, okay, well, there's XYZ ways that you can do it, and your income can be helped by this streams and so on and so forth for the qualification process. It became a lot more clear how people are able to do this, how we can help other people do this, and how by doing this, we're actually helping other people actually have safe housing, right? Which is a big shortage in the community.
Mm-hmm, absolutely. So now is the portfolio a mix of some of your own together plus some joint venture partnerships along the way?
Exactly. Yeah. So that's something that after we proved the concept ourselves, that we were able to show people what they can do with this, and then we joined multiple joint ventures. A lot of them at this point are repeat, so we're blessed in that way. And yeah, I've never looked back since.
Very cool. So finding somebody to do not just the one deal and be done, but they can recycle their money essentially into the next deal and so forth.
Exactly.
Yeah,
exactly.
I think that's a big hurdle for people. They think, okay, if I want to have 100 units or 100 homes, I need to find 100 different people that want to partner or that want to lend me capital. But that's not the case. For us, we really focus on the experience for our partners and people that are investing with us, and even our power team. And so we always want to focus on the experience. And with a good experience, you're typically going to get people that will want to redo a new project with you. And we, like Carol said, we've been very fortunate that the experience has been really great for our partners.
Yeah, absolutely. And it's easier, I think, just to have less partners and just more deals, because then you're having one conversation maybe with one person for 10 different things rather than 10 different conversations.
Absolutely. They know what to expect of you and you know what to expect of them. And, essentially these people are our clients. They are somewhat of our bosses. And so we want to make sure that we're getting into relationships with people that have that trust and transparency, and we're going to give that right back.
Awesome. So you mentioned you're doing some flips and you're doing the BRRRR strategy, I think predominantly, which is buy, renovate, rent, refinance, repeat. My favorite strategy, still my favorite strategy.
Yeah.
But why did you choose that one?
So mainly just because of the products that are available to help you scale, right? Like if you really want to get to more units, the ability to build equity in a home and take that equity out immediately, tax-free, and then do it again is just unmatched, right? Basically all levels of government, CRA really just are against flipping. It's a lot more of a risky business, especially in Ontario.
Yeah.
And yeah, that's basically where our skill set lied. So, and where our resources were. So, I think a lot of people that are starting out that maybe don't have the funds and haven't been able to have proof of concept start more so doing things like wholesaling and things like that. But fortunately, basically when we got started, we sold our home and we started house hacking and we said, let's go all in. So we had a little bit of our own money to start and we just wanted to recycle that. while we prove our concept.
Yeah, I think along with that, like Carol said, doing a flip could be risky. You rely on the market, and the market could be down when your flip is coming to an end, and it's maybe not the best time to sell. When you do the BRRRR method, you're essentially flipping to yourself, right? And so you're able to see the benefits within a matter of months, and take those benefits and the financial security that you've gotten from there, and go ahead and repeat.
Yeah,
You're not relying on the market as much.
There's definitely different strategies for changing times as well, right? I mean, flipping was probably very lucrative in the past 10 years. Today, it's definitely a little bit riskier. Buying assignments or rather pre-construction condos and hoping to assign those was a great strategy probably for the past 10 years. Again, maybe today it's a little risky. I don't know. I don't have all those answers, but I think it's just about pivoting the strategies, pivoting what worked 5 years ago probably doesn't work today. So what are you guys doing that, with the rates increasing, with the markets changing, with your portfolio and your business right now?
Yeah, so we really see real estate investing as having two different kind of income streams. One is the active or the short term, and then one is the long term, right? So any BRRRR method that anybody gets into right now, you might have to leave a little bit more capital in there for the longer term if you want a cash flow. So you're kind of trading off short term for long term benefit. Thankfully, our portfolio had a lot of cash flow. Obviously, that's taken a hit. So now that focus is still a lot more just long term. So we really pivoted to doing things more short term. So now things like going into different markets. So for example, in January, we started buying in Edmonton, which historically has not had a lot of appreciation. So not a great long-term strategy, but great for cash flow right now. Airbnb as well is one thing that is great for short-term strategy, short-term cash flow. But again, the uncertainty of regulations and stuff in the long term, maybe not such a great long-term play. So we really have focused on doubling down on the short-term piece. And really densification is another one, right? So originally we started with a lot of duplexes and that worked out really well. Now you need more like triplexes and fourplexes to really get the numbers to get me excited, get us excited.
Yeah, along with that, the method doesn't really change, but what you do with it might change, right? And so you just have to make sure that whatever project you're getting into, we're looking at multiple strategies that we can complete with that project, and also multiple exit strategies. We never want to be locked into just one way of doing things. And that's led to us being able to diversify within our own portfolio, different strategies, different types of properties, and even different provinces, like Carol said.
Yeah.
No, that's really well said. And you guys are very similar to what I'm doing right now, right? It's still, the BRRRR strategy is still, in my opinion, my favorite strategy. It's still a really good strategy, but instead of doing it with singles and doubles, now you got to do it 3 and 4 units as minimum, and then you got to figure out, okay, can this be a short or midterm rental property instead of a long term to boost up the cash flow? And again, there's still some uncertainty with the short term, so could it still be a good midterm, executive type of rental, corporate rental? But it is about pivoting, right? Because right now with the rates, we don't know exactly where the limit is going to be. And it's just about making sure that we can still somehow mitigate and recoup some of that cash flow over time.
Absolutely. And the one thing that I'll say kind of has changed in our strategy is the liquidity piece, right? So before we were a lot more comfortable getting into 5, 6, 7 projects at a time. Now I feel like it's very conservative to leave a lot more liquidity in your accounts because you might be holding your properties for longer. Your refis may come in very differently, not even because the values actually changed. Like we had a property where they basically applied a 20% depreciation month over month just because in the region it went down that much. But they didn't even consider like if it was a condo, semi, or whatever it was. They're just applying like blanket things because regulations are changing. So you got to be prepared for all this kinds of stuff. And can't rely on the refinances like you did before, right? So
yeah, be very conservative in your ARV, your after repair value estimations, your cash flow estimations, right? Your numbers, rather than maybe something appraising at 1 million might be 800 today, and maybe if you're estimating a few little more increases, it might be a little bit less. Again, it's market dependent, but it is important to be conservative. Carol, Brandon, thank you. You guys don't go anywhere. We're going to be right back. We're going to have Carol and Brandon walk us through one of their BRRRR deals, and we'll be, I think you guys did really well on this. So don't go anywhere. We're going to be right back. Hey, it's Sarah Larby here. Did you know that if you are selling your home or investment property, one of our preferred agent partners will sell it for you for free? That's right, 0 commissions. Head over to our website, everydayinvestor.com, to find out more.
The mortgage world has changed. Has your advice? Are you looking for a modern approach to your mortgage planning process? Advice tailored to your unique, ever-changing circumstances? Whether you're upsizing, downsizing, purchasing, or refinancing, the Kyle Ford Mortgage team works with individuals and companies to custom tailor the right mortgage product for you. Working with a wide selection of lenders, we're here to serve our clients and help them achieve their real estate and retirement goals. Contact the Kyle Ford Mortgage team today, Canada's mortgage choice.
Hey guys, Lee here with Wise Construction. Want to talk really quick about getting your energy efficiency up to code on your new investment property. So if you're converting or building something new, going through a bigger renovation, and you're going to insulate your home and or do new windows and or do a new furnace, these are things that all qualify under the energy rebate program. Before you demo, what you want to do is reach out to someone who does energy audits. Get them to come in, let them perform the test. I believe it is you can get up to $5,000 back, whether you do one or all. It's a great option, great opportunity to get some money back for money you're going to spend on your projects. If you have any questions, feel free to reach out to me.
Hey, it's Rav. A few years ago, I learned how to trade stock options by taking the Theta Trading course. My son, my friends, myself, all of us benefited immensely by applying their strategies, and I want you to have that same benefit by taking their course as well. I'm not receiving any monetary benefit whatsoever by telling you this. It's just that, as you know, I believe that knowledge mitigates risk. Visit their site to find out more.
Welcome back. I'm here talking about the BRRRR strategy, about pivoting, and how to scale from 2 doors essentially to 25 plus in a matter of a couple years with Brandon and Caro. Welcome back. So let's dig into one of your deals, just so people can get an idea of like what the BRRRR strategy is and how you guys are maneuvering through it. So what is this deal exactly that we're going to go over?
Yeah, so this was a side-by-side duplex. So this one we actually got in January, and we wanted to specifically show it to show people that even if you bought in the height of the market, there were still really great deals out there if you run your numbers properly and you have the right calculations. So this is one of the strategies that we pivoted to. We went from a side-by-side duplex and it's in fourplex conversion. So in Edmonton.
Okay, all right, very cool. Now, how did you find this deal?
It was an off-market deal. We found it through 2 investors that actually moved from Ontario to Edmonton. We connected with them. We stayed in touch, and they basically brought the opportunity. And for us, it was no-brainer. We said, let's go for it.
Okay, all right, very cool. So let's talk about the numbers. So the purchase price, how much did you buy the property for?
$378,000.
Okay, so $378,000. Now, was there any negotiation? Was it a multiple offer scenario, or did you offer asking?
It was exactly that. That's the number that the buyer wanted. The number made sense for us, and we really looked to create a win-win situation there, right? So luckily, again, a lot of the negotiation happened with our partners out there in Edmonton, and so again, this is the number that they arrived at.
Okay, all right, awesome. So the down payment. I'm assuming because you are investors buying an investment property, it's 20% down, correct?
Right. Yeah.
Okay, so that's $75,600.
Yeah.
All right, and what are the closing costs?
So luckily, it was pretty much just legal costs. There's no land transfer tax in Edmonton, which is also another great bonus.
Another great reason. So
$3,000.
How much?
$3,000.
$3,000.
Yeah.
All right, and then what did you do once you closed on the property?
So we converted the units into each unit into a duplex. Again, they were side by side. So we created, I guess, basement units in each side to a fourplex. And the renovation costs are approximately We're going to call it 200,000 because we're still in the finish lines and we're just right around there.
All right, 200,000. How easy was it to find a contractor, somebody to do the work from so far away? Because you guys are in Ontario, and all of a sudden you're buying your property, many provinces away.
Yeah, absolutely. Like Carol said from the top, we really leverage partners and our power team. So for us, it's all about building those relationships. There was some people that maybe flaked out on us, but in true fashion, you just got to move on to the next one, right? So we were able to do everything remote. That's really the power of delegation, is you don't have to have your hands on everything, and you can really do things virtually and remotely as successfully as you can if you are there live in person.
Very cool. Now, can I ask, did you buy this sight unseen, or did you go and see it, or did you rely on your realtor?
Sight unseen, and that's also the power of FaceTime, right? And so, even here in Ontario, sometimes we're doing that, where we have a great realtor, a great contractor that's bringing us a lead, and we have a busy family here, and we have things to do. So, doing things virtually is kind of the new way for us now.
And I think you really have to have the right team, because for me, you guys, there are some things that I've bought totally sight unseen, but I know that realtor, as an example, is also an investor, has experience in renovations, has done a few with me prior, or, has done some with other investors that I've, gotten to see and know more about. So not every realtor out there is going to be the realtor that you can fully trust for this stuff. So definitely there's lots of great realtors out there for sure, but they're not all made the same. And it's just important that they really understand what you want to do, your goals, and your strategy in order to really be able to do that.
Absolutely. Exactly. I think we interviewed about 3 different people just to make sure we're finding the right fit that's for us and somebody that we can trust as well, for sure.
Yeah.
Awesome. All right. So the renovations, are you still going through the renovations right now, or are you finished?
One of the units still under renovations, just wrapping up.
Okay. Yeah. All right. And then the after repair value, have you gotten it appraised, or this is kind of like what you've seen on the market?
So one of the sides is actually finished. So it came in around $350,000. So we're expecting both sides to end up being $700,000 combined.
That's pretty good. So you bought the entire thing for $378.
Correct.
And then one side only was appraised at $350, which is almost the same price as both of them originally combined. All right. So the ARV is $700.
Yeah.
And then you are going to refinance 80% loan to value to get your cash out. So you'll have a refi
of
$560,000.
Yeah.
And so that's awesome. And is it your first one in Edmonton?
It is the first one in Edmonton. Yeah. And again, this one we bought at the height of the market, right? So there's all this talk about the market going down, and I really think people need to take that with a grain of salt, because that story is not the same. It's not a blanket story for all of Canada, all the neighborhoods all across. Obviously, you have to be careful.
So essentially, with your renos and everything, you've got about $20,000 left in the deal.
Correct.
So you're refinancing all your money out minus, let's call it $20,000. So it's almost like a perfect BRRRR, and those are rare, where you're pulling everything out and potentially and then some. But you've got now a house with 4 units, or a building or property, however you want to call it, with 4 units, paying you rent every single month that you bought for $20,000.
Exactly. That's why we're so excited about it. Yeah.
Without seeing it, or have you seen it now? Have you seen it at all?
No, we don't really have any intention of flying out to Edmonton either. So just continue to leverage your power team. Yeah.
Very cool. All right. So let's talk about, the cash flow and all that good stuff. Cash flow. So if we look at all of your income minus all of your expenses, what are we expecting?
It's going to be about $18,000 a year.
Okay, so $18K a year.
Yeah.
Which is essentially, if you've got only $20,000 left every year, you're
getting it back. Exactly.
And then what's the appreciation like in Edmonton? We always compare that to other provinces, depending on what happens. I know, the next couple of years are going to be interesting. But what are you guys estimating for appreciation? Just rules average.
Yeah, about 1%. So $7,000 a year.
All right, so 1%. I think that's good. That's conservative. So that's $7K a year.
Yeah.
And then the annual mortgage pay down with, I think a lot of people forget about the mortgage pay down, right? Your renters, your tenants are paying down your mortgage for you. That's equity that's building up that, is going essentially back into your pocket, whether you refinance down the road or you sell.
Exactly.
So what is that looking at?
Like $18,000 a year approximately.
All right. So mortgage pay down is $18,000 a year.
Yeah.
And then what is your return on investment?
So we really calculate return on investment based on the amount of cash that we left in the deal, right? So when we calculate it that way, really it's like a 215% return on the $20,000 cash that we had in the deal. Just crazy.
You know what? For a fourplex, that's going to give you $18,000 a year of cash flow. And I'm assuming you looked at it with the increased rates. Mortgage pay down, another 18 grand, and then your appreciation, if you get, is the icing on the cake. So essentially, with 20 grand, you got to have the money obviously in the beginning, but with 20 grand left, your ROI is 215%. That is awesome. Congratulations, guys.
Thank you. It looks so great on your board there. Thanks for sharing that.
There we go. There we go. So what's next? What's next after this?
Yeah, so right now we're wrapping up a couple of minor things that we had on the go, and then on to the next one. Again, more a densification of projects. So we're looking at our next fourplex conversion, potentially in Edmonton, potentially in the Niagara region. We play in those markets primarily.
Yeah, I mean, the sky's the limit for us. And like you said, right, at the very beginning, it all depends kind of where the market is kind of making us pivot, and that's where we're going to go. So our bread and butter is the BRRRR method. We love taking on JV partners because we can teach people how to do this, and they can go ahead and teach their families and repeat themselves. Or if they don't want to do the work, we're happy to do the work for them on a repeat basis too. So we're focused on just more diversification and seeing where the market takes us.
Amazing. So you have a small child as well. Yeah. How do you manage? And I don't know if you both have full-time jobs or one of you now has moved into this full-time. Maybe you could share that with us. But how do you manage what you're doing, your jobs as well, real estate, and having a very young son?
I ask myself that very same question every day. No, hiring help from the beginning was key. We identified, we're really big nerds. So we did a time audit and identified the main things that were consuming our time, right? So like cooking, grocery shopping. And then we looked for ways to save on that. And that saved us a ton of time. From there, we moved on to finding our magic time windows. And we really try to focus during those times. So we also created an organizational chart between Brendan and I and divided the responsibilities. It really does help that both of us are so well versed into the business, just because it really is two people working towards the same goal. So it makes it a lot easier. And then babysitting also with the grandparents, which they really enjoy, helps.
Really, it's the power of delegation. Really understanding where we're going to have the most fun. That's where we want to focus. What's that one thing that I love to do? What's that one thing that Carol loves to do? So we can double down on that, have the most fun, leverage our skill sets and our talents, and then really try to delegate as much as possible. We don't want to be doing anything that's going to be time consuming or making us feel like this is actually work. We want to just continue having fun with it.
Amazing. You guys are an inspiration. Thank you so much for your time today. What is the best way for our audience, viewers at home, to be able to reach out?
Yeah, you can. We're really active on social media, so you can check us out. Specifically on Instagram, if you want, at Medallo Properties. Yeah, that's our handle, Medallo Properties.
Amazing. Thank you so much, guys, for being on the show and sharing one of many successful BRRRRs. And congratulations on your success. And you at home, thank you for tuning in. And don't forget, we are coming back next week as well. And so we hope to have you back. Carol, Brandon, thanks so much.